Time for the latest earnings outlook now with Research Director Shiraz Mian. Okay, earnings season for Q4, about a week and a half or a couple weeks old at this point. What's your assessment so far?
It's actually not bad. The expectations for the fourth quarter were set by the third quarter reporting season, which you would recall was the weakest over the last 10, 12 quarters. So the expectations had come down enough that many of us suspected that beating them or getting ahead of them would not be much of a problem for companies. And that's what we are seeing. The growth rates, the beat ratios, the medium surprises, all of those are way better than what we saw in the third quarter. When you take a longer span for this entire earnings cycle, when it got underway in 2009, it is on the subpar side. So it's weak relative to the last many quarters, but when you compare it to the third quarter, it's quite good.
You wrote recently in one of your commentaries, it's fairly reasonable to assume that the ratio of companies beating expectations is going to be higher than what we saw for Q3, but that will likely not matter much this time around. What do you mean by that?
Well, the primary reason for that commentary is that the critical element in the earnings story right now is not what has happened over the last 3 months of 2012, but what will happen in the coming 12 months of 2013.
I see.
As I have been saying here quite often, that expectations for 2013 remain elevated and need to come down. So it's not so much how many companies beat, what rate that beat at, and what the surprises are. It's what they tell us about the coming months and quarters, because it's their outlook for the business and for the industries they are in, which will determine expectations for 2013, and that's the more important element in terms of how the earnings picture will evolve over the coming days and weeks.
Okay, financials reported this week, and as we talk here on January the 17th, we're still missing a couple of key financial companies that haven't reported yet, but update us based on the data that you have at this point on the financials.
Finance has been a major growth driver last few quarters, and we are seeing that trend still in place. The pace of growth is not as high as it was in the third quarter, but it's nevertheless positive and better than the broader market. That said, the overall picture on the finance side is mixed. You have pockets of strength. The mortgage business is doing very good. The capital markets, investment banking, trading, that has done reasonably good. But net interest margin, which is the bread and butter for the conventional commercial bank, that is very compressed right now. And for most of the banks, the fourth quarter net interest margin is lower than the net interest margin in the third quarter. So we have some strong numbers from companies like Wells Fargo. We have Goldman Sachs, good numbers. JP Morgan wasn't too bad. But then you have Bank of America with a lot of charges and a number of moving parts in their report. Citigroup in the same way. Many of the regionals overall are in good shape. So the growth numbers look fine, not as robust as we saw in the third quarter, but better than the broader market. And the weakest part remains for the banks, the revenue number. So revenues are weak. The surprises on the revenue side are far weaker than what we are seeing on the earnings side.
All right, on the technology column, Apple's December profits forecast to fall in the 3% range year over year. Is technology going to put a drag on earnings this time around?
Technology is a drag. Technology is a drag. It was a drag in the third quarter and is expected to remain a drag in the fourth quarter. And you put your finger on the key point. Apple, it accounts for about a quarter of all tech sector earnings, and tech, remember, accounts for about 1/5 of the S&P 500 earnings. So whatever happens in tech has an outsized bearing on what happens in the broader aggregate earnings picture. And the tech earnings, getting into the tech earnings season over the coming days, are expected to be in the negative. My assessment is that we'll probably get barely into the positive, but that doesn't really do much to prop up the overall earnings picture for the market.
Okay, I know you're going to keep your eye on what's been going on here or what's yet to happen during this Q4 earnings season. A couple of places that you can find some updates on the earnings season is in Shiraz's written earnings trends commentary. You can link to it right off the homepage at Zacks.com. And also, he writes in the Ahead of Wall Street section every day and notes any changes in aggregate earnings trends there during the peak season. So just a couple of places for you to check on Zacks.com. With Shiraz, I'm Terry Ruffalo.